Welcome to Introduction to Renko Trading and How I Trade. This is a Renko chart. There you go. Look at that. This is a candle chart. Ugh, it's horrible. Look at the difference. So easy to see. You can tell whether it's going up, you can tell whether it's going down. That just looks like a mess. That's why I trade Renko charts. All right, what is Renko? A Renko block or a brick is a charting method that filters out market noise by focusing only on price movement, not time. So this is a chart that focuses on time. It's set to 15 minutes. You can set it to anything you want, a second, a month, whatever. It doesn't matter. What each candle is, in this instance, is 15 minutes of time. So you've got the candle bodies, which signify the open and close price, and you've got the wicks, which signify the high and low within that 15 minutes. Okay, so if it's green, then the price is closed higher than it opened. If it's red, the price is closed lower than it opened. That is time. But Renko doesn't do that. What Renko does, a block will only appear when price moves a set amount in one direction, which is called the block size. Green blocks form when the price rises by that set amount, and red blocks form when the price falls by that amount. So I have them set up as 100 pip blocks, which means if price moves 100 pips up, a green block will form. If price moves 100 pips down, a red block will form. And that is it. Now, it smooths out the charts. That's why traders use them. It makes trends and reversals easy to spot compared to traditional candlesticks. So if I showed you that chart there from sort of here upwards, you can easily see we're in an uptrend. It's very easy. If you look at this bit here, you can see we're consolidating. Quite easy to see. On this one, you can kind of see that you're in an uptrend, but there's a lot of noise. I mean, it just looks so much cleaner. That's why I trade Renko. My rules, though, and the way I trade them are as follows. Okay, so first and foremost, I use something called CTrader. You don't have to, but I do. I find it easy to use. All these screenshots are taken from CTrader. You don't have to install anything additional. Renko blocks are already... You can already set your chart to as Renko. You don't need to download anything extra or anything like that. So I like CTrader. I use Renko blocks set to 100 pips. I trade US 30. I primarily only trade the first half an hour of New York, typically. And the way my charts are set up is I use hardly any indicators. I use two moving averages, which are simple moving averages. They're both period 7. There's a green moving average, which is period 7, and that's it. And there's a red moving average, which is period 7, but there's an option where you can shift, and it's shifted by 1. And that's all I do. I also have a MACD at the bottom, completely standard. I don't change any parameters apart from, I may have changed the colour, I can't remember, but I haven't changed anything else. Just simple MACD, 2 lines, and that's it. So if I want to buy, what I need is a Renko block first to be below the 2 moving averages, and then I need it to cross and close above. So I need it to cross up for a buy, cross up through the moving averages, like this candle right here. Can you see that? Then I need the moving averages to cross, and the green to be above the red, which you get on the close of the next candle, as you can see, or sorry, block, as you can see. And then I need a cross on the MACD, which you get on the next one. And then there I would put a buy in for 100 pips, which is 1 block. That would be the target price there, and the stop loss would be 2, which would be there, 200 pips. Now you might go, ooh, that's a negative risk to reward. Ooh, you win so many. It works for me. You can try it your own way. You might not want to use 100 pips as a block size. You might want to use 50, you might use 200. I don't know. Trial it yourself. This is what works for me. The sell rules are just the same, but in reverse. So you want the block even to close through the moving average. Then you want a cross, and you want the green to be or the red to be above the green. So always think of it this way: whichever's above is the way you're wanting to go. So when green is above, which it was in the buy, you're wanting to buy, and when red is above, you're wanting to sell. So the cross happens on this block, and I think the cross happens at the end of this block as well. So you would put a buy in here, 100 pips, 200 pips stop loss, and that would win. And that is it, basically. That's it. That's all I do. But you may have seen on my live trading that occasionally I will let runners run. I won't just necessarily go for a 100 pip take profit. I will occasionally go, oh, hang on a minute, I think this could go a lot further, and I'll let it run. And this is why I do that. I'll show you on the next one. So this is New York Open yesterday, I believe. And there was a video on the channel of me trading this particular day as well. So this is market open, this line here, for 2:30 UK time. That is New York Open. So at this point, we are trading up. There's no real reason that we would sell here. There's no real reason why we would buy here, because as you can see, the price is just continuing to move up. I like to buy on the pullback and when price crosses through. That makes sense. At this point, probably wouldn't. Now, these lines that I've drawn up here, these are, and you can't see it on this screen, but these are previous resistance lines. So here there is some resistance a little bit further over there, and there's a little bit here, a little bit further over there. And then the next resistance is up here. So what I noticed, and you'll see price was moving up very quickly because you can see the time down here, lots of blocks formed, it was moving up quick. Price kept going up and up and up and up. And when it kind of got to here, I think I had a couple of losses here, 1 or 2 losses, because I was going for a short and I got stopped out. But here, price was stalling at this support, at this resistance line up at the top. And I thought, if price breaks through this and then breaks through the next one, there is nothing between here and resistance up here. So I think if price closes above here, I'm buying, and I'm going to trail my stop loss, because I think there's an opportunity here for price to go a lot higher, even maybe up to here, which, as we can see in the end, it did do. And that's exactly what I did. So occasionally I will trail my stop loss and I will go for a larger take profit, but only really when stuff like this happens. I can see that price has broken through resistance, and the next resistance is quite a fair way away. I think price is probably going to motor on up there. So occasionally I will trade like that, but not always. And yeah, have a look at the trade I did yesterday, which was the 17th of September. Have a look at that, because I do that on that video. And that's basically it. That's basically how I trade. So it's not difficult. It's very straightforward, really. You just need a couple of indicators and away you go. Now, I'm trading every single, or most days. So I would love it if you'd subscribe to the channel. I'd love it if you'd make a comment. I'd love it if you shared some of this stuff and let other people see it. Try it out for yourself, see what you think. I'm going to be not live trading, because I don't think I can live stream just yet, but I will be trading in about 2 hours, and you'll have a video in about 2 hours of today's trades, and we'll see how we get on today. So there we go. That's it. Renko, it's brilliant. Give it a go. See you on the next video.